Thanks, Inkosh. Yeah, man, I've honestly been having such a tough time finding music that's YouTube friendly. So hopefully we get some good tunes going. Yeah, exactly. But there, even like from the copyright free shit, like YouTube will still pay attention to some of it, which is fucking nuts. What's up, some dude? How's it going, man? Bro, you have no idea how hard it is to find fucking music. Just trying to get all the marquees of the world in here, okay? And so it begins. Nato Dog, what's happening, dude? When Nirvana, when we can afford it, bro. Fucking, that's gonna be an expensive soundtrack. What's up, Punk? Yeah, man. How are those divs treating you? The Kai on the Sensei. I saw it in my head movies. Bro, honestly though, that movie's fucking fantastic. It's one of my favorites by far. It's the last time somebody's gonna get away with doing blackface and not fucking get cancelled. I see dead people. Alright, let's get into it. Welcome to the stream, guys. I hope everybody is doing well. As you can see, we've done some upgrades to the stream. Hopefully you guys enjoyed it. We're going to be doing those as we go along here, trying to, improve the quality for you guys. A couple of disclaimers. I'm not a financial advisor. This is not financial advice. I'm just doing some trades. For all the tools that I am using on the stream, you can find them on the BAPigindicator.com website. I have a reference link in the description of this video. If you guys use that, it would help me out a lot. We also have a bunch of free tools available, and even though we have access to all of them, we still use them. They tell us different things about the market, and they're extremely useful. So you can even start with those. Also, come join us in Discord. There's a link in the description as well. All the indicators can be found under the indicators tab. I actually don't think they have all of them listed under the packages here. I think they've programmed so much more since this website was designed. So come ask in Discord what exactly what the packages mean exactly. Let's take a look at some of the tools that I use. I use Stock Market Chameleon, or marketchameleon.com rather, I should say. They have a great IV30 rank tool. They have a bunch of other tools available to. Yes, there's also a new design for the BAPig indicator website coming. I use this to source the stocks that I want to trade by IV rank to see how expensive the auctions are, and that's the sound of market open. It's a great free tool. They also have some premium things as well on there. Tastytrade.com. If you're still trading with lines and RSI divs and moving averages, in here they outline pretty damn well as to why you shouldn't be doing that and why that doesn't make sense. They have the Skinny on Options math series, and this is where I started learning about mathematics and trading, and it's helped me out a lot. a lot. Brilliant.com is another fantastic resource. We're not sponsored by them. I'm not sponsored by them, but they have a lot of great courses available for you to go through. A lot of mathematical courses, a lot of probability courses, and even finance courses on there as well, I believe. They have a lot of different areas available, so check them out as well. All right, I want to take a look at the market just quickly here. S&P 500 is going to be opening up. It has opened up, yes. We saw the big dump yesterday. Will we see follow through today? Likely. I don't know if it happens today. Actually, this is where the free tools could come in. You know, the DWT is not giving you an extreme here, so it's suggesting that, hey, today might be different than yesterday was. Although it is in that range of positive autocorrelation there. We also have a new tool available. Bali was showing it off yesterday. I was showing it off yesterday. Let me see if I can find it on my infinite amount of charts. Yes, the self-similarity. This is we're going to be using this in place of autocorrelation. So hopefully it'll give us a bit more insight into the market, be a little bit more accurate, and it's actually declining today. So it is suggesting that today is going to be an update because yesterday was a down day. Okay, let's take a look at some of the other indices. Where's the chart? Yes. Is there anything else interesting on here today? Volatility is still rising. Trend is still quite negative here. Still quite random from the entropy reading here. Still generally bearish. I don't have a price target or anything like that for you. What's up, Skay? No, sorry, bro. This isn't the mic clicking stream. At 100K subs, we do mic clicks, okay? Until then, you know, we just do divs and shit. All right, let's take a look at NASDAQ very quickly. Yes, okay, so some changes in the NASDAQ distributions here, which we actually didn't see yesterday. So let's actually take a look at this. This is the free moments indicator, very helpful. You'll see me using it almost all the time. This one is free, and it tells you a whole lot about returns. Returns are right on that middle line there, so not negative per se, but also not extremely positive here. It's just kind of saying, hey, you're right in the middle. We got significant skewness. This can persist. I'm actually going to take the bands off. We got significant skewness on the, was this yesterday? No, this is actually today. This is today, so significant skewness. I'd be looking for this one to mean revert at some point in time. It can persist for quite a while, like we see in these areas here, but they do mean revert back to the middle at some point in time. Does that mean that we're just going to blast upwards? Probably not, but we are likely to spend some up days in the near future. And as you do have kurtosis here, yes, this is telling you there's a fat tail present. You know, is this extreme in kurtosis? No, it can get much more extreme, but it's just starting to get there. So this is telling you that, hey, outsized returns are likely in this area. We might get bigger and bigger moves. So this is kind of in confluence with the volatility metric. You know, volatility is rising. We're getting negative correlation here. I don't pay too much attention to that correlation. It's very slow in terms of trading, but hey, just another data point. Trend is confirming down still. Trend is confirming down. We will have to wait and see how today trades. I'm expecting today to be an update, but I'm not going to be betting on it, just FYI. Okay, let's move on to the indices. Let's see how the world did. Australia, yes, very similar to the American markets. I'm going to turn this back on to mean. There's now significant negative skewness and significant kurtosis present. That was not the case yesterday with Australia. So likely up in some near future. Deutschland 30, Germany, we see the negative trend declining here. We see QMZ giving us an extreme on the volatility here. So do we cool this before we get any further significant moves? We will have to wait for it to turn down. It can get more extreme as we've seen in these areas here. Anything on the PEP? No. Anything on entropy? No. All right, let's take a look at RTSI, so this is the Russian index. You know, it was looking very, very strong as the oil producers and the nat gas producers and nat gas in general were outperforming the market. I think it was 2 days ago, Monday maybe. They had a very big up moves. We saw entropy on this decline and then pick up a little bit, and now starting to decline again. I am still positive on this, but not so much with not so much conviction, just because we see a trend decline here and it is moving down currently. It's still positive, but it is moving down. And MOM3G, which I personally like out of all the trend indicators, you know, I pay attention to this one the most. It is now negative. It has flipped. So if we do close today or tomorrow below the POVMA, I would be looking for the next big moves to come from the downside. We will have to wait and see on that. Volatility is still rising. You did get a local extreme here. It has now declined. We can spend some more time going down in volatility before we pick back up. I actually want to see this area. It's very similar to the other markets. You know, we see, oh no. Like what we're seeing that QMZ outline is areas like this here and like this here. You know, so in general, as HVP is trending up, you're gonna get these peaks in it, and that's what the QMZ is trying to outline. So I just want to give you an idea of, you know, it's not suggesting that we go to zero volatility. It's not suggesting that we also blast in volatility. We could just do something like that. Yes, okay, I'm happy with that. Let's take a look at the IMOX. All right, what's going on here? Low, please. All right, IMOX very similar to the RTSI index. You had entropy moving down this entire way, giving you some certainty. And is it going to pick back up here? I would keep an eye on this one to denote that, hey, this up move is now over. We could spend some time moving down, and that would be confirmed with the MOM3G and the ACDC moving down together. If these two go negative, if we close below the POVMA, nothing special about that range, by the way, guys. It's not like it doesn't have to bounce on it. It's just giving you an idea of like, hey, if a big move is going to come to the downside, the price is more than likely going to be below it already, right? So just for direction wise. Volatility still moving up here. Hey, Hane, can I lick your div? Yes, Hane, you can lick my div. Anything significant on the moments? No, not at the moment. When you get a moment, can we check any U.S. natural gas or energy stocks? Yeah, absolutely. They were actually outperforming a couple of days ago. Can you throw some tickers that you want to take a look at, Peter Muffin? And I'll be very happy to look at those, because I did actually want to cover natural gas. I was just gonna ask that too. Yeah, absolutely, guys. UK 100 is still kind of in this bullshit area. You know, is this a bull trap? Yeah, potentially, maybe. Who knows? We got to see what price does. Anything significant here? No, very similar to the S&P 500, Nasdaq, with volatility moving up. This is what I'm worried about across all markets. I don't want to give a sense of direction other than where it's obvious. Like, for example, on the Nasdaq, you know, I've been bearish on this asset for a little bit, for just a week here, just because the direction has been picking up to the downside. It was making it a bit more obvious, and we were below the POVMA, and we had volatility rising. So I don't want to give an impression that I know something about the market, because it's random. It's just random. Where was I on the indices? IMOX, UK, yes, okay. Anything else that's significant here that I see? I want to take a look at the MOM3G. Oh, hey, we hit the first expected move, by the way. MOM and ACDC are actually going positive here. Will this persist? We will have to wait and see, and we can actually check. What can we check? Because it's bouncing up and down, maybe we can check the similarity. No, no. Okay, so when I'm talking about similarity, I'm talking about this one here. It is something that was brought out yesterday by the awesome BAPig team. They put in quite a lot of work on it. It is currently in beta, so there are bound to be updates on it. Energies XOM, perfect. Thanks, Polly. Let me see on the UK 100. What is it saying here? Yes, so it is declining currently, same I think as the SPY. So it's suggesting today is going to be an update, unlike yesterday, because it's not going to be self-similar. But that's a little bit obvious here because it's already an update. LNG, EQT, KMI. Okay, perfect. Perfect. Okay, that's awesome. I will check those in just 1 second. Where was my chart? Okay. Let's take a look at China. You know, China, we were saying this trend is very likely over. It was giving us hints here on the ACDC yesterday and the MOM3G. Volatility still rising, the QMZ of volatility still rising. What's going on?
Yo, what's up?
What's up? Sorry, you're echoing. I'm gonna mute you for just 1 second. Okay. So that the China 50, this is likely over. You will get some indication if we have a reversal back to the downside here. One of them would be your closing days below the POVMA. Another one would be your direction going negative again. So keep an eye on that if you're trading this asset. I don't know who the fuck is trading China. I wouldn't be. On the HSI. Very similar to China, volatility still rising. It is still below the POVMA, but you have a decline in trend here. You also have entropy moving up, suggesting that, hey, this certainty that you got here is likely over. So this move, I wouldn't be expecting this to have any further downside here. Matter Dog, I have 1-2 FYBR 40 million in insider buys this week. Wow, is Nancy buying? Dude, if Nancy's not buying, I'm not interested. Honestly, she's fucking she's queen when it comes to timing the market. Holy shit. Came from China. BNB went up unusually too. Okay, yeah, we'll take a look at crypto in just 1 second. I wanna quickly run through these. Come on, mom. Japan, we were seeing this one be the strongest one out of probably all of them, and it is now closing below the POVMA. Yesterday was actually a significant day for Japan because you have volatility still rising here, and you have what looks like to be a change in direction. Right, so this is what I mean when things look good, it doesn't mean that they can't turn around right away. You will get hints about it, like we saw a declining trend between these 2 points. It is not divergence, it is just a decline in trend. Chill the fuck out. And we saw, you know, MOM3G picking up on to the downside here, and now ACDC is picking up to the downside here. So I would be bearish on this asset as long as the volatility is rising, as long as there's no maximum, or not maximum, as long as there's no extreme in it, and as long as we're trending to the downside, it makes sense to be bearish on Japan. Nikkei is probably very, very similar. Yes, we actually had a very bad day today. It looks like a gap down. Those gaps got to be filled. Yes, no, definitely not. Volatility still rising, very similar to the world indices. Nothing interesting on the moments. 12K, yeah, 112K. Dow Jones, let's take a look. Let just some of these things load in here. Okay, I do want to see the MOM3G, what that is saying, but let's take a look here for 1 second. This is still trending down. Yeah, this is still trending down. Did you see Shaq said no longer sell it? Really? Dude, Shaq is always a celeb. Plus, he made a shitload of money. I think he actually, he was like fucking in Google pretty fucking early. Shaq. Icy hot back patch. All right, let's take a look at the mom. What? Smith's Rex about hanging out with Shaq? No fucking way. I don't believe it. I don't believe it. Hello, Mom. All right, Mom's taking its sweet ass time. All right, let's see. You had some entropy move down here, and it's been kind of rising ever since this area. I don't have much to say on this. I don't know if this down move is over. I would just say, hey, you're not getting certainty here. Stuff like this would suggest that it's done. Is this the end tail of it? Maybe. Um, yeah, I wouldn't be paying too much attention. I would just say, hey, it's kind of random. Volatility still rising. Very, very similar across all markets. That's kind of why I'm so worried about it, because what happens when we have a global sell-off? All your correlations go to one, everything looks the same, and everything sells off. So, but that could work on the upside as well. Actually, I don't know if that works on the upside. Does that work on the upside? Probably, right? Have to check. All right. S&P 500 we've taken a look at. Nasdaq we've taken a look at. Let's take a look at the VIX. VIX had a big pump yesterday. Volatility of the VIX is still rising. It was giving you an extreme here. Entropy is now moving down. Okay, I'd be kind of worried. It's kind of trying to give you certainty here. Not very low, but still something to note nevertheless. Chan on Mom 3 fix. Okay, gotcha. Yeah, the guys, the thing with the Mom 3G is it samples so much data, and it gives it tries to give you a little bit more certainty in trend, so it is doing a shitload of calculations, so it's bound to take its time, but that's also why I use it. All right, let's take a look at the crypto stuff. I just want to look at the two majors. Bitcoin we were covering. We were saying that, we're likely to continue down last week because of trend here. You're still not getting any entropy move down, so still quite random. And you do have significant negative skewness and significant kurtosis. So you have a fat tail present and your distribution is skewed to one side. So we will see that mean revert at some point in time. It really doesn't have to go far to mean revert that. That's why, if you're using this tool, if you're not using this tool, you should be using this tool. But if you are using this tool, pay attention to when it mean reverts, and how much you should be expecting out of it. Like I use this example here. We had skewness, and then we had this update, and it was mean reverted just on that. It wasn't guaranteeing you all of this. It was just saying, hey, you could have a update, and we did see that. um, so beware of that. You might not, if you're betting on this persisting, you would be going short right here, right now. If you're betting on this mean reverting, you would wait until the mean and then see how things go there. I would be paying attention to trend. Actually, ACDC looks like it's curling back down and declining in trend. Let's see what the mom says. Mom is kind of confirming that, but still very negative. Still a downtrend here, still increasing volatility, similar to the other markets. Like, let's see, Ethereum. Ethereum was actually giving you entropy, so you could look at this one to rise. If it does so alongside the MOM 3G here, as well as the ACDC, that might denote that, hey, this downtrend is over. Time to bet the other way. Yes, I love the fucking entropy. There are reasons why I use DWT instead of Hearst exponent. I'm just wondering, I might try. So Hearst is attempting to tell you whether you're gonna have clustering around a mean. Yeah, this is entropy. I do use the DWT, but I use it more so as like, hey, is today gonna be different than yesterday, or is it gonna be the same as yesterday? It gives you extremes very, very rarely. I use entropy instead of the Hearst, because what Hearst is attempting to tell you is, are you going to be clustering? Is price going to be clustering around some sort of mean, or is it likely going to be getting further away from the mean? I prefer DMT to DWT. You and Joe Rogan, both, my friend. So it's trying to discern between trend and mean reversion, and really pay attention to what those words mean. It's not like, like price doesn't have to go crazy during trend. It's just more than likely that, hey, you're going to be getting away from some sort of point, whereas here you're more than likely going to be spending time around a certain point. Right, whereas the entropy, what it's trying to tell you is it's trying to tell you how certain the next candle, the current candle, is going to be compared to the last candle. Very similar to what DWT is going to tell you, but it's going to give you much more occurrences, first of all, than the DWT I found, and I find it to be just much more powerful. This tool, entropy, was brought out much later than the DWT. It's also a paid tool, whereas the DWT is a free tool. Both are very valid and useful in what they tell you. But I think actually I was talking to Bali yesterday, and he was saying, like, yeah, DWT is like a sampling tool to tell you what's going on right now. And entropy is a little bit more powerful. It's trying to tell you, hey, this is not so random here. You might want to deploy some money. Yes. Okay, so I covered those. I want to take a look at rates. Rates are actually dumping a little bit right now. They did have a pretty massive week up, as far as rates go. This is the 20 years. We're up 16% on rates. So yesterday, I know there was a Yellen and Powell meeting. It was a bunch of fucking theater. I don't know if anybody here caught that. This shit was hilarious, Yellen was saying, like, they were talking about the debt ceiling, and Yellen was like, yeah, like the last 79 times we had to raise the debt ceiling, we raised it in a bipartisan way. And it just, like, if you guys are going to come and do this, like, every, 4 years, year, whatever the fuck, like, why don't you just abandon the idea? Like, why do you guys keep lying to each other that the debt ceiling somehow matters? 80 times in a row they fucking raised it. What's the point? If I were them, I'd throw Yellen some good D. Bro, Yellen would poof into dust if you fucking threw her some good D. Oh my god. Of course, we're talking about vitamin D for all the Twitch censors here. Yes, sunny days, sunny days. Okay, so let's actually, what do I want to see? Do I want to see TLT? No. Currencies. US dollar on Dixie still performing pretty well. It had a pretty big move up yesterday. Today looks like it's getting some follow through. Volatility still very low. Trend is positive. You are getting a local, I don't want to say minimum because it implies that it can't go any further. You're getting an extreme on the downside here. So there's a guy in here, in the US that turns in strippers on TikTok to the IRS for not paying their taxes, and he's making 60K a month. I figure this is the perfect time to start accepting applications for my new firm, which I'll be cracking down on hosts on OnlyFans, WhatsApp, and Snapchat. Pro tip, take out the dentures. Yes, when you suntan, definitely take out the dentures. All right. All right, this is gonna get on really fucked. Okay, so the MOM 3G is most likely confirming because ACDC is quite up there. Still no entropy though, still quite random. I would say bullish until further notice. I would be still worried about this volatility. I would be expecting it to pick up over the next 120 or so days. In currencies, they don't tend to get too volatile. We have chunks like this and chunks like this, but for most of the time, especially, when the market is just going up for 10 years, you're not going to see too many blocks of volatility. And when you do see them, they, like over here, you're getting this low on the QMZ, and then you didn't get any like really meaningful chunks for like the next 215 days. Do you want to bet volatility in currencies? Maybe, but it's a dangerous one. Good thing those mic lickers are all Russian and German. Fuck, not all of them. Some of them are from Texas, especially the most popular ones, I believe. And US doesn't fuck around with that. There was actually a bit yesterday in the Yellen Powell meeting where, they were questioning about the $600 limit that gets reported to the IRS, and one of the senators made a good point, which is like, if your thing is that you're trying to catch the big guys, avoiding taxes like all the corporations and shit. Why the fuck are you looking at the $600 payments? Like, how many of them are hiding taxes in $600 payments? She was just like, yeah, well, double accounts and everything. And it's like, they probably have offshore accounts where where they don't get taxed on, and it's not like it's like a loophole. It just, your taxes are a competitive space. Like, if another country has lower taxes, why the fuck wouldn't I keep my billions of dollars there? It just doesn't make any fucking sense. All right, USD CAD, very volatile here. The HVP is quite high. What else can I say about this? Not a lot, just sneaking around, quite random. I wouldn't want to be making bets on this one at this point. USD ruble, also quite random, very low volatility. I would be expecting that to pick up. Trend looks like it's going positive. Mom is actually giving you a positive entry here, which ACDC has not confirmed yet. Tax the rich, imagine. Yeah, fuck, seriously. All right, let me just scroll back up. I want to see all of the LNG shit. All right, let's take a look at the XOM, which I believe is the spider. Is this a spider? No, it's ExxonMobil. Never mind. I'm a fucking idiot. Entropy is moving down on this up move, pretty good. You got a extreme in volatility here, most likely cools off. Looks like it has already cooled off before it picks back up. I would be expecting this to rise. Looks bullish. I don't know if I would enter here or if I would wait for a lower price. I think that if the volatility is cooling, if we see the trend kind of cool off a little bit here, with these dark green bars on the mom, you could probably get a lower entry somewhere around the POVMA. I don't want to be making it sound like a call, but I would be pretty bullish on this going forward. Looks like energy in general is going to get more expensive, which is, mom does all the combos probably having a hot flash. Higher energy prices, it's very tough for just general people, like people like you and me, because hey, we have to pay more for gas, for heating, for electricity. If you're in an area where you're being struck by a hurricane, you need energy. You need energy everywhere. Production, everywhere. Chevron. Let's take a look at Chevron. All right, Chevron quite random here. Volatility is rising. I actually want to see this one on the weekly because likely you're still, yes, okay, you're still in this cluster here, which is still declining. You are getting a low on the QMZ, so we could actually pick the volatility back up here on the weekly because you are at a low on the QMZ. That is possible. You're getting trend flips here on the ACDC and on the MOM, yes. And above the POVMA. So I would be bullish as long as that persists. Yes, still quite random here though. Nothing to say on entropy, and nothing to say on the distribution. Let's take a look at LNG. I'm assuming you're looking at Chiniri. I don't know how to fucking say this. I'm assuming that you're looking at this. A decimal point off my badge. You tell them, hey, you want fraction. Okay. All right. So the LNG ticker. This is not the future. For whoever was asking about this, if you're looking for futures, just let me know. Entropy is moving back up. You did get quite a bit of certainty in this area, which was nice, but it's still quite low. You have a positive trend here. Nothing to say on the distribution, and probably mom will confirm the positive trend as well because ACDC is quite high. I'll be bullish on this. This looks very nice. This looks very nice. Like when you get entropy and then it falls off, it doesn't mean that, hey, you're just gonna go way back down. Like we see these areas here where entropy fell off and you had this down move, but then it continued back up. So it just depends on what you want to trade and how you want to be trading it. It's just saying that, like, hey, after this point, where's vertical line? Like after this point, candles are just going to get more random. You're going to have less predictability, although it is still in the low area here. It's moving up. That usually denotes the end of trend, but it doesn't have to. Like we see this here, right? Like you got a lot of certainty on the way down here. You saw it moving back up, and hey, over here you don't have any certainty. So probably you shouldn't be expecting this exact thing of like craziness down to continue, right? That's all it's trying to tell you here. If you go to jail, do you still have to pay? All right, chat is going fucking nuts. All right. Yes, very good. Very good. I do want to take a look at the nat gas futures. I think it's NGU1, if I'm not mistaken. Yes. We saw this thing having a good couple of days up here. It's still positive, volatility still rising. I would expect that to continue as long as we're above the POV and trend is still positive and volatility is still rising. You're not at any sort of extreme here. The numbers, what do they mean? All right, let's do some more numerology, guys. All right, I think there were a couple of other tickers that I missed. Let's take a look at BNB. Yes, let's take a look at BNB. BNB USDT. Do you guys trade the perps? I had this friend I sent chart to for a year. Then after a year, he was like, "What do the candles represent?" Oh man. Yes, BNB had a decent move up. Back up to no entropy is not gonna work on this. Okay, that's fine. MUM's moving up and ACDC's moving up. This is suggesting that the downtrend is ending here. It would be interesting because this looks very similar to Bitcoin and Ethereum and also the stock market, right? And so this might give us a clue as to how the others are going to react going forward, right? Like if this manages to turn it around here, if trend manages to go positive while volatility is still rising, you do have this, you had skewness, you actually worked it off. It could come back up a little bit more here. And you do have a fat tail here. If this manages to turn it around, it might give us an early indication into other shit too. Just because this is a bit of a less liquid asset than obviously the SPY and the NASDAQ, those might take more time to turn it around, and they'll also probably give you smaller gains. And hey guys, if you want to check, what's more likely to give you higher returns, you can look at the omega ratio, right? You can go to compare 1, 2, 3, 4, 5, 6, 7, 8, 9. You can take a look at, where the fuck is omega? Hello? Right, this is versus Bitcoin. So BNB is much more likely to give you a higher probability. Yes, higher probability of having higher ratios of gains versus losses. Yes, exactly. Very powerful tool when you're selecting, what do I want to be trading. Also, if you're going to be picking assets based on this, you should know that it also gives you a higher probability of higher losses, right? So something that is likely to outperform is also likely to outlose if it moves against you. Yeah. Taste whack, what's up? What's happening? All right, look at the 1 hour on BNB or 30 minutes. Let's take a look at the 1 hour on BNB. And we can actually turn the entropy on here. We see volatility cooling after giving you a nice chunk here, giving you a nice extreme here. Entropy is moving down, giving you some certainty. I'm actually going to take this off. Trend is positive, but you have a shitload of skewness, and you have a pretty fat tail. So it just depends on how you want to bet on it. Do you want to bet on this persisting? You know, do you want to bet on it not persisting? You know, we could just mean revert over the next couple of candles here and move down to some sort of a lower range without exiting this uptrend. Very positive. Very positive on the short time frame, especially as entropy is moving down. It's kind of giving you certainty here. I don't think you've missed necessarily this chunk of volatility. You know, if we end up doing something like this, not manipulated at all. Yeah, all prices manipulated, all of it. Even if you just consider the fact that everything's kind of priced off dollars too, right? Like somebody's got control over those, even if it's like a systemic control versus like a one person control. It's still, you know, still all bullshit. All right, so I'm going to go ahead and make an assumption that mom is positive here just because of how positive the ACDC is. Let's see, actually, let me take the expected move off. Oh, yeah, and then let me put a cone on. Probability cone pro. Right, so we saw it have some autocorrelation. When you're on lower time frames, it makes sense to look at, you know, more extreme probabilities, just because you're going to get more occurrences of those on the lower time frames because there are more periods here. We're getting to the 0.1% range where above here, like if you're trading, especially if you're delta trading, and you know you took a trade on this low in volatility, or maybe you took a trade on the PEP a little bit earlier, on the yellow followed by the blue here, and the mom going positive here. I would want to start taking payouts. It doesn't mean that it can't go higher. No, it can absolutely go higher. It can persist much longer. You know, the cone does give you updated probabilities the further you go. Sorry, I should be going this way. Like all of these cones are valid simultaneously, right? So especially as volatility is expanding, you're much less likely to, the cone is much less likely to be correct when volatility is expanding because you're moving into bigger and bigger ranges, right? Market's still random at the end of the day, but if I'm betting probabilities, I would be kind of taking profit up there. That's just me. I don't want to be giving signals or anything. Unquote short silver. Silver dropped 3.5% today. Actually, let's take a look. Let's take a look. XAG USD. Holy smokes, dude. Peter Schiff is going to be upset on that one. It's going to be very unhappy. We actually have this low in HVP here. We could set the cone over there. How many days is that? 39 bars. Good. You know, how crazy can this get? I'm not calling for this, but I'm saying it's within the range of probabilities here. That $13 is how crazy it could get. Like that's, you know, that's very, very extreme and very unlikely to happen on the daily. In fact, that only happens 0.1% of the time, and yet it is still within the range of probabilities. But also we should note that $70, or what is it, $56 is also in the range of probabilities. Check AVAX USD when you get a momento. Yes, absolutely. Let's take a look. I think we were looking at this one yesterday. Yes, we were, and there wasn't enough data on it to run the cone and the entropy. You can sample smaller areas with the cone and the entropy, and it can still give you a lot of context, but obviously it's not going to be as accurate because it's not sampling such a long period of time. Declining volatility, I would not expect to be exiting this kind of range. I would not be expecting to continue this onwards. What we were doing here, we can actually look at it through some of the free tools as well. Nothing on the distribution here. Trend is going negative, has gone negative on MOM actually, and is about to flip on the ACDC. If you get confluence between the two, I would look for some downside. But I the thing that I would bet on is that this area does not continue in the same way right here, right now. It can definitely pick up later, but I would be looking for a little bit of downside here. Every time people are freaking out and expect a flight to value, store of value, gold and silver dump. Yeah, man. Honestly, it's another fucking risk asset, right? Like gold and silver, not even so much, man. Silver has a financial attack vector on it in the sense that it's used for shit. I know that gold is used for stuff too, but not as much as silver is. It's very weak as a monetary instrument. Whereas gold, it still has a lot of those gold bugs attached to it. Federal Reserve still buys it. A lot of central banks still buy it. I know Russia bought a fucking shitload. China is buying a shitload. Um, but at the end of the day, if people are short on dollars, if countries are short on dollars, they're going to be selling shit to get those dollars because when monetary tightness comes, banks and companies they need to settle their debts, right? There's no more dollars coming into the economy. The transactions aren't happening. Debts can't get paid. That's why we see a massive sell-off in assets, and that includes gold, and it definitely includes silver. If we see on the other side very loose financial conditions, if we see excess dollars in the system, that's kind of when that's kind of when you see gold being bought up. I think Bitcoin is much more risk-oriented asset too. I don't know if it for all the store of value people out there, I think it's just a fucking playground for gambling. To be honest, it's extremely frictionless, much more frictionless than gold is or stocks are, right? So that's why we get those crazy pumps. All right. Vlad, FOMO into crypto will be better. Yeah, man. I can't wait to FOMO into crypto. Exactly. So that's kind of what I wanted to cover today. I want to see how the SPY performs today. I want to see how the Nasdaq performs today. I'm kind of expecting some of this. I don't like I'm still worried about volatility here. But the DWT is saying that today is going to be an update. It's not going to be a continuation of what we saw yesterday. So that's kind of what I'm expecting. I can definitely be wrong on this one. We should place bets on what shitcoins Vlad eventually FOMOs into. Yeah, absolutely. Honestly, probably fucking all of them. Just go and buy out exchanges. All right, I do want to open up the spot. Yeah, guys, if you're not yet in our Discord, come and join. Come ask questions there. Come hang out on the stream. Come talk shit. See what's up. Give me 1 second here, guys. All right, I've sent some invites in the spot. Let them know they can flash their P&L in Discord. Yes, if you're brave enough. Yeah, P&L actually, not P&L. Yes, come show off how big your P&L is.
Hey, honey.
Hey, honey, what's happening?
Yeah, man. Yeah, this is nice, bro. When you talk your finance, that's the best part. the tools, we're all looking at the same shit. We see the same stuff.
Yeah.
That's good, man. race, and this was nice and sweet. In coach is ruining it as always.
It's okay, we love him too.
Like, you can't even spell cubicle, okay?
Exactly. I want to buy a new iPhone live on stream. I'm not buying the new iPhone. Fuck that. I'm okay with my Huawei Android being spied on fucking cell phone. I'm good to go.
Yeah, let me check your phone to see if you're a pedo. That's a nice. Who knows if you're a pedo?
Bro, what are you afraid of? You know, if you don't have anything to hide, you know, you should be good with it.
Yeah. You have no heroin in your. Can I say what?
Oh man, the shit's getting so ridiculous nowadays. It's getting weird out there.
I'm telling you, if I were them, I would be like, hey, yell it. I know you talk a lot of shit. You want some D though, right?
Bro, Yon hasn't had vitamin D for like the last 150 fucking years, I swear to God.
Yeah, she has that lizard pussy, bro.
Yeah, probably. Dude, fucking. It's probably where coronavirus came from.
Yeah. No, but this is good. The opening one, we should do. I think we should do like a short and stick to the point. Then the other one we can
bullshit around. Yeah. There are gonna be like going forward, guys. This is gonna most likely be the format where we do two streams a day. You know, you guys are always welcome to ask questions, and we'll always focus on any kind of info that you want.
You agree? I'm like asking your opinion.
No, that's how I want to do it. I think that's way better because then I'll get much less tired for the second half of the day, and like it'll be more engaging. And I also want to try and do like a learning video. Like we'll go through all this stuff and most likely watch like one tasty video, and then I'll invite some people back on in the evening for the market close, and then we'll have some bullshit. Why no one long stream for the whole market open? Honestly, one, I get tired.
And then he said, like, if the quality drops and people just ignore it, I don't think it gets hype.
Goes
what has engagement, and then if it says, oh, this is some inactive shit that people background or what, then.
Yeah, and it's also that's the other thing is that I want you guys to be engaged. I want you guys to find this pretty fun.
Like, when you wake up you should really have your positions at around the close. I told you they did that study that like if you bought calls like you shouldn't open your position. So by the time that the close comes, we have more valuable things to see. You should be longer. Inco, she's just stuck in the fucking
Coach just wants 8-hour daily stream. Someday, man. Someday. I don't want to have dead air, and until I know what I can put on there, I'm not gonna do it. Like you guys have shit to do as well.
Like I did fucking long one, and then you want to be consistent.
Yeah, exactly. If you guys have questions, absolutely ask them. And also the other thing that I want to encourage people to do is to go out there and find some interesting financial things, like what kind of news of the day that we can review on stream. We can have some videos playing on stream. Like, what are you guys interested in? Exactly. Yeah, no signals here, bro. No signals here. Oh, I did want to showcase some of the pro tools. Now, Bali, I saw in the scripts, right, the invite only scripts that I have, they're kind of denoted by like different emojis to begin the script name. So do those divide the packages that we have available?
That's a hard question. Like, okay, so the guys handle this, but like, the mail me money ones, the ones that are, the majority of them mail me money. I think we changed them. Those are like free, but we give it to anyone. But like, they have to be like if they're active or they're, and it's like for 30 days we give it for free or something. Literally, I have no idea. Like every time.
Yeah.
I forget what. But then the BAPig ones are just the ones you see on the site, and then like the extra ones are perks, right? So like that's why they're not on the site either. But like, and then the goat brain ones are like mail me money, but for paid. So like mail me money was the idea was that hey, if you don't lie, but like write, we'll give it to you, and then for a period of time. And also the idea is like we want you to make money to be able to be our customer.
Right.
So help you make money pretty, and they're not like that. You know, they're great, but you shouldn't like pay for them. So it's more like
That's
we don't want to
fucking
like give
nuts.
out the source code.
Yeah.
So it's just get closed. So but like we give it to
That's crazy.
And then Goat Brain is like pro. So whoever gets pro
Yeah.
is again that's like you have to like subscribe for 3 months or something before you can get, because a lot of people cancel. I don't know what that is.
Gotcha.
But then that's the so there's like the pro, there's the paid, and then there's the free, and then majority of people get the majority of them.
Right.
Like Cone Pro, for example, you have to wait to get, and then the Goat Brain ones are the same way. And also because we were changing everything, that could change. But like yeah, we have 3 tiers, and like 2 of them are paid.
Gotcha. So yeah, because I wanted to cover, I did a stream on the Mail Me Money tools that were available there. I saw a couple of uploads of the list here.
We should probably, it probably makes more sense to do it for the ones that people are paying for. Like if a guy who's getting it for free has a question versus the guy who's paying for something has a question, we should take care of the guy who's like, the scale of the free one is bigger, but the paid one's paying. So
Yeah, absolutely. And I myself had some questions on the all the BA stuff. I wasn't able to include all of it in this chart. You see the guys in chat. You see me use the probability cone quite a lot, especially for trading and stuff. And yesterday you saw me use the probability panel. Those are very significant to any sort of trading that I do. Peter Muffin says, yes, do the opposite of what Vlad says. Yes, exactly. Do the opposite, absolutely. I bought news of the...
That is just going to be, they expected the value of the trade isn't up to the trader. So like whether you listen to, like, I bet you're going to position yourself around the mean, and then
right. So the reverse RSI divs, right? Like the improved version of the reverse RSI, is that paid?
Yeah, that's everyone was like making a div, and then we were like, okay, so let's make the best div, and then we realized like the whole thing is dumb. This is not for the reasons of like div being dumb because it's we said, okay, let's assume div is a thing, like not divergence in distributions is a thing, like that you can measure it, but it's not like I can spot it. But with this one, this is what's his name? Lazy Bear has the reverse.
Yeah.
But like he had the wave trend, but I couldn't make the reverse wave trend. Pig is the one who started all this reverse stuff, and then asshole caretaking everyone like piss us off, copied, and they have a bunch of reverse. But like Pig started it. So
gotcha.
With the RSI div, it's like what you want to extract from a div.
Yeah.
We're not doing it with a div, but like we're extracting that info for you.
Gotcha.
And then it's if you put this with the Lazy Bear one, this would be a subset of the Lazy Bear one, because the Lazy Bear one is like it's not exponential. It's just dumb TA.
Right.
This lines up with the cone. It's because it's the same math, and for the div part, it's like high low take to have a. Right. It has nothing to do with like full div with that. And if you think about it, how do you like this? They're so stupid they don't get this. Like you can't tell a local high or a local low live. You have to look back to see if that was like when you have a div. Like, and these idiots don't understand price is random now. So you want me to wait like till it passes, then look at the pass, and like they didn't even realize this. So that's why that exists.
Right. So yeah, guys in chat that are, using the RSI currently, this might help you quite a lot. I wouldn't recommend that you use the RSI to begin with because it's fucking stupid.
This just gets those range numbers. Like the same reason the RSI exists, not
Yeah.
because we made the RSI, is because we did the panel and that was like math was required to do the.
Right.
So we were
Right.
just showing that we can do the math. And then same thing here. It's like it's tradable, but it doesn't need to get. And then the combo with the entropy is good
Yeah.
because if there's predictability, then you. And then this
Right.
has those ranges, and then it's like those are actionable things. But it's to look at it and say price is going there. The odds of price don't change.
Yeah.
So right. So like yeah.
Yeah, so this is kind of where entropy and volatility can definitely help you quite a lot. It can give you a visual sense of establishing a range, but ranges can get expanded to like there's no limits here. It doesn't the price doesn't have to sell off here. It doesn't have to get bought up here.
But see where it lights up. That's insane that those line up. Like this, we do Hoffman coding. The entropy has nothing to do with our side, right? But like it lights up where it's like bouncing from this thing, and that's evidence that like really like this is there's a degree of predictability in the market, and like it's really interacting with something. So it's like if it's completely red, or then it has nothing to do with what's like. But when it's dropping, something like that, it was inefficient there. It was
right.
So we don't know why. It's probably because so many people use RSI. But like this, if you want to like make a claim that I looked at over, so like you need to show that entropy was dropping, or was significantly below what it should be, because otherwise it has to be like these areas where it's red. It's just by chance, bouncing around it.
Right.
So if it's that's why it's powerful. So when it's lights up, then again, you can't. Your assumption shouldn't be mean. So we're like, okay, now it's like the range is more meaningful, I guess.
Yeah. And when you guys open this tool up for the first time, it's going to come with a lot more metrics on it. I currently have it set to show the second standard error to give me some ranges instead of just one single price. The range is going to be much more useful. And then I have it to show labels. Yes, and that's
impossible RSI. That's another one. Impossible RSI. Like the whole thing was that was like, okay, how do we mock the RSI, but like it's a metric, and then the assumptions on it are incorrect. But like if you measured some, but impossible RSI literally like another one that's like impossible shit. So like Pig made its distribution fit like a Gaussian one. I forget the. It's just like just because we don't use it, don't think that it's not good. It's actually great.
Yeah. Yeah, very tradable.
A good example of it is like GME or what. I remember someone showed me. But Impossible RSI, we even have a whole set of like that was so powerful, that method of doing. The problem is it's more signal processing and then we just went with like let's. It's the thing that when we come up with something we trust, if it's in a textbook, we go like, okay, so this is a established idea. It's just the opposite of what these assholes do. All their ideas are great. We downplay our great ideas.
Yeah. So check this one out, guys. It is pretty powerful. I'm not sure if the regular entropy or the entropy pro comes with this package. I saw the regular entropy had the BAPig.
Yeah. Now it's updated. I think the pro one comes with pros.
Yeah.
The pro ones are like the cone, the expected move pro, and the entropy pro, and then the non-pro one. I think it's like when you buy the probability package, is that you have to be a customer for 3 months. I think something like that.
Gotcha.
And then you get it out.
Gotcha.
And when you get it, so like when you get all in, you get all of them. You don't need to worry about which is which. If you're free, you get a bunch of them. You don't need to worry about which. if you're paid, you get all of them, and then there's you're a customer for like 3 months.
Gotcha. Yeah, so for guys in Twitch, there is going to be a website update coming soon. I know a bunch of people in our Discord are working on it. So all of that will most likely be made much more clear going forward. Because right now it doesn't mention too much about what you get. It mentions the things that you get, but it doesn't mention all of them.
We wanted people to have access and use them.
Yeah.
And more about that than like charging people and not having a price.
Right.
So the rest of the guys figuring that part out.
Yeah.
I'm not like dictating it. It's just we're figuring it out.
Yeah. So there's another tool here that I have the HVZ on, and the HVZ attempts to combine the QMZ, is that right, and the HVP together to sort of.
HVZ is just the Z-score volatility.
Okay, it's just Z-score volatility. Okay, gotcha.
The only thing that's good about it is that like everyone looks at EWMA.
Yeah.
Not the only. It's like it's like one of his favorite things. But EWSD nobody uses. That's interesting. Also for craft score you can use it, but it's sort of better than HVP because HVP can get stuck at zeros and hundreds. And the Z-score value changes all the time.
Gotcha. So it can give you a better idea of like, hey, you're
with the marks. If you put the mark oscillator on top of
if you put the mark oscillator on top of the HVP, right?
No, HVE.
HVE. Gotcha. Got it.
Regular volatility. If you go to the Z-score of the regular volatility, the only reason it's probably separately by itself, so you wouldn't.
Yeah. In Coach, I don't use any alerts on the indicators because if I'm doing scalps, I'm gonna be at the computer. You can though. It's just a me thing. Like you could do a stream just on setting alerts for different indicators. Fuck, probably, man. There's so many.
You will, man. You will. Like whatever we're gonna. It's like ask people what they want and deliver for them. So like if
absolutely. Absolutely. Yes, so the MOM3G is included in that as well. You guys have seen me use the MOM3G. This is one of my favorite indicators actually for telling trend and direction. I use it quite often.
I don't do you in code. Look at it. He's gonna get us banned. That's all he does.
And I use these in confluence with each other for trend stuff because it's a little bit more variable. You do get the MOM1G in there as well. A lot of these things are very self-explanatory. You know, you saw me go over the concepts on the free tools because they're a little bit more complex in terms of what you need to observe from them. But like if you have a trend indicator and it has like 4 states, you can imply a lot from those 4 states. You know, you don't really need to know how it's being calculated. You need to know that it's telling you direction as well as strength of trend, right? Like the QC is one of those indicators. The POP-E, I believe, is on entropy. Is that right?
Yeah, it's the entropy of it's the portion of price that's like POP, and then the entropy of that it just correlates. See, it really doesn't matter. The whole idea is that like you can have a pigeon that correlates with the price.
Yeah.
As long as the correlation is like your assumption, then it doesn't really matter. Well, you know, so you just gotta worry about analyzing that correlation. And then,
right. And so the idea with POP-E is that you would enter when it's low down, right? And then you would look for the yellow dots as exits.
Yellow dots are where the value is changing. The change is 0. So yeah, value doesn't change. So like if it's giving you I think you have the background thing off on the POP because the green is like, okay, it's bullish, and then the blues are signals for entry. That's where it's low and you want to get in. And then
oh no, you're talking about the PEP. I'm talking about the POP.
No, I'm talking about POP too. The bottom one, right?
Yeah, the bottom one.
So it doesn't have the so then it's only bullish or bearish, and then it's the R square. So it's how much is the higher it goes, the more it fits.
Gotcha. Gotcha.
Like if you line up the yellow with the price, like a yellow dot with price where it was bullish,
Yeah.
it would have been your exit because it's like
because the value is changing over here.
Divergence, but it's the rate of change. When that is zero,
yeah,
it goes, okay, so it's probably changing.
Gotcha. So this would be your entry when it's low, when it's developing a trend, and you got good confluence between the ACDC and the MOM here, the MOM 3G as well as the MOM 1G, and you would be using this for your exit.
This idea applies to everything. Like the reason the first correlation coefficient exists, is because they didn't have a thing to get the correlation of different indicators. Right. They just have correlation as if they're different. But then this whole idea that the R squared is the fit, that's our idea too. And then that applies to, like, when that's all you should care about. That, like, how good is the fit. Otherwise, you signal, like, whatever. It could say, but like, if the fit isn't there, then it doesn't matter.
Gotcha. So you actually got quite a lot of confluence on this one. You had declining trend, right? You had HVZ being at a extreme here. Yeah, clean trade. Wow. Good.
Yeah, that one's pretty good because the portion of price, it's such a like derivative of price that it's not so shocking that it's like MOM 3G is more, to me, it's like, or like when when something is like when those idiots were like, oh, well, we figured out ours look similar, and I'm like, of course it looks similar. It's accurate, and it's off of the price. There's one way for it to look like.
Right.
No, but Papa, like things, just the number of them, people might think, oh, but they really are like all new things, and we just probably just have, like, for the record, like we had these are our ideas, and they exist. It's just, but I personally can't say. And the other thing is the back test. We shouldn't even say this, but like back test on TradingView, we can make it say anything.
Right. So, like,
you can't really test it and go like, well, on the back, if you have a good fit for the past, you're guaranteed to underperform for the future.
Right.
You know for sure that the future is not going to be like the past.
Yeah. Man, I did a I did a back test once, and it said I would have made 3,000%, and then I went go trading the fucking strategy. Yeah, it's very dangerous. Yeah.
Yeah. No, we stopped, and then they wanted us to make a random.
Yeah. And you got also the inverse variance MA in that package as well. You see me use the portion of volume MA, the concept with inverse variance. I think this was the first one that you made that's kind of like in this theme, right?
Well, the good thing, the good thing about inverse variance is, like, inverse variance is a thing in statistics. If you want to measure things and then get rid of the change in them, you multiply it by the, and they call the inverse variance precision in stats. So the reason it's called precision is not because it's precise in this thing, is because that's what it's called. And then the whole thing with that MA is that, like, every fucking just follows price. If price goes up, it goes up. If it goes down, it goes down. This one, it needs the precision. Like, if price is going up and precision, then it will go up.
Yeah.
And if it's so that's why. And then the coloring, it has its own math. That's why it's good for, like, calling tops and bottoms. Like, when a move, and then you have to think when does for precision to go up, variance has to decrease, right? So,
right.
Like, when you're going up, and then this is, like, not following price, variance is decreasing. As soon as the move is done and the variances start decreasing, this will shoot up.
Yeah.
And that's why it's good and different.
All right. So it attempts to tell you that, like, on the white areas, hey, the variance is not changing here. Is that right? And that might be a potential top and or bottom, because when if you were to continue moving up, the variance would be increasing, right? Just by the nature of it. Like we see at the start of moves here, for example.
Something that's pumping.
Yeah.
On something and the pump's not done. it's not going to follow the price.
Right.
When the pump is done, it'll shoot up, and then it's not going to predict the pump. I mean the end of the pump.
Yeah.
It needs to happen first, so it gets there late. It's not the exact thing, but that's why you have the color is like gets there before the MA. The color does this. It checks if the MA and variance are increasing or decreasing. It checks two things, and it has 4 states.
Gotcha.
But we got to see what people use, and then the thing is, I explained this like multiple times on Discord. I don't know how much of it people have heard, but for a new person, this is too confusing the way I'm explaining it. I need to make show more shit.
Well, I think I'm gonna be doing some trading streams, and I'll hopefully be separating my charts out into the individual packages. That's kind of my plan, and then showing trade setups on and how they might look.
Yeah, we still are like developing tools, and like that's not done. So like that's why the manpower is not like
right.
Like you saw similarity yesterday. Like it's still new shit coming out, and we're almost done. We're almost.
So the other two tools that are in the probability package that are extremely powerful is the probability panel. Very good for telling you the actual odds that you're betting on. You kind of want to make sure those are in your favor, because over the course of a large amount of trades, your returns are going to line up with that, right? Like if you're betting on 60% probability of being right, you're going to be right 60% of the time.
Also, this thing that everyone wants to know the price by the end of the year, predict for me who gives a shit about what you say? It's what the odds say. And this is how it's calculated.
Yeah, and then 40,000.
They're like boring because it gives them an answer. Like, is it going to be 1 million? I don't know.
Well, yeah, it's just exciting for them, right? Like it's like the fucking show.
No, like if it's like that's fine if we were like living in caves. It's like a calculator exists, multiplication table exists.
Right.
You're making plus 2 times 2. Like we know it's 4.
Yeah.
Like, what do you do?
So for example here, the probability is actually saying that, hey, you got 26% chance of closing below 40K in the next 30 days. You have 35% chance of staying inside the range over the next 30 days, and 37% chance of going above the range over the next 30 days. So, if you're looking for massive shorts here, this would hopefully allow you to manage your expectations a little bit, because, hey, it's not like it's more likely than us staying in this range or even going above. It's just that's more likely. Can it still happen? Yes, absolutely. But it's just not as likely to.
It needs to happen first. So, like as is, these are the odds, and then like there's no evidence that they're gonna because it's on the future, right? So it's the current price. So like if that changes, then the odds change. It's like it's a function of the price. It's not gonna predict for you the change, and also like everything else, it assumes the current volatility as it. Like it's not doing the math of
like future volatility.
It's expected. We're doing that thing that is like a cone on cone. It's you project the volatility, and then based on that, but then that's.
Let's take a look at a higher.
One problem is like the more parameters, the more like you add into your assumption that so like this is the purest.
Right. So actually had this candle go outside of the range and then pulled back in. So closing actually below 16K is like getting 10 heads in a row. Is it possible? Yes. Is it likely? Extremely no. Do I have log on? Yeah. No, I don't. That's why. Jesus.
You can just right click. Your thing is covering, but you can just right click there and it will.
Yeah. And this is just as likely as happening as 282,000. So if you're a betting guy, you can either make what is it, like fucking 50% down to 16K. You can either make 62% to the downside, or you can make 526% to the upside. You know, like this is why we also talk about you're much better off going long, managing size, spreading across a lot of assets, and then just buying up buckets. Like,
The majority of people just don't get this. That like prices log normal, and even these
yeah,
idiots who are copying our shit don't get this because they don't get it. But prices log normal, and then by definition, it has less frequent but more significant up moves and
yeah,
more frequent significant down moves. So that's why it's up only.
right,
Enough time. Yeah.
yeah. And so
Also,
if you want to visualize what's possible, you can use the cone, with lower probabilities. Like you can even do like a 50-50. Like put 25% on either side.
these idiots who go, just trade up and down every candle or whatever, they're not even bright enough to do absolute returns added up and see that they're running around the pool with a bucket. I say
Yeah,
this, right? Returns are like rain, and these idiots run around the pool with a bucket trying to catch more rain. Like they're so dumb, they don't get that it's multiplicative. So
right.
like, yeah, you multiply. It's like you get fuller percentage of your bucket is full. The higher percentage of your bucket is about fucking large. It's like, and then you multiply. All you need to understand is geometric returns. So you get your returns, like, and then so like if 10% would be 1.1 up, and then 0.9 down, and then you multiply that by price. Price doesn't go up a dollar, down a dollar. It goes
Right.
up a percent, down a percent. So, and then it can't go more than 100% down. So your minimum is zero, and then your maximum is infinity.
Yeah.
So if the market is like a random geometric returns generator, spits out geometric returns, and then you have between 0 and 1. If you get a returns there, your price will go down, and between 1 and infinity, your price will go up. Which side do you want to bet on?
Right.
Like if you have,
Exactly.
yeah.
Exactly.
And whoever says I'm a bear, that bear, they trade. They're idiots who don't get this, and their odds are the.
Yeah. I mean, we saw Tasty harping on them too. It's like it just brings in fucking viewers. It's just exciting.
Jacob comes and politely says it, but like Tom's always short. But the reason he's short is different reason. Like you
Yeah.
sacrifice delta. If you're selling premium, you short Vega. They assume this. You make the assumption that okay, so volatility comes, price is going to dump. So as a safety measure, I'm going to have short deltas. So in case I'm wrong on Vega, I can make money on delta. But that's not going to work. And like it's the thing that in traditional markets is just the assumption is that any with volatility means price is down.
Right.
It's good for that. Also, like it doesn't make sense to constantly sell pre. It makes sense like if you're rich as fuck and like you go, that's the easiest money I've ever made, like selling 2 cents. But like to grow your account, you can't start that. And also, yeah, at the end of it, you don't own anything if you just trade
Yeah.
derivatives. You got to own like you were cash in, cash out, and you go to zero. But like if you hold spot, and then like the purpose of derivative is to adjust your spot position,
Right.
right?
To reduce
Like
your
I'm
cost basis. Yeah.
but I don't have a car, but I'm gonna insure it. Like it's not even for that. So they want to just sell you bullshit that I'm a trader and trade the 1 minute. Piece of shit. Yasha says, just be rich, trade the 1 minute. Yeah, no.
Yeah.
Literally, and then if you take scalps, it's fine. But this idea that like the asset has a certain amount of, and then you have your delta multiplied by that. When you're
Right.
not like, you're never going to make more than the asset's returns because your delta can't go more than 1. So like whatever you're doing is going to be a fraction of it. You're making way less.
Yeah. Yeah. So yeah, like that's also what I was mentioning when I was doing the indicator overview stream. Like if you're looking to get filthy rich, going trading from like a $2,000 account to like the $1 million account, like the chances of your success are fucking so slim.
Yeah, like I'm the guy who I've made 100K a day. Like people get lucky and then they don't realize fucking once in a lifetime.
Yeah.
The market gives you returns, and all you can do is capture. You have nothing to do with the returns that you get. You're just there. It literally is like how much rain comes, it's not up to you, but like how wet you get is up to you.
Right.
How much of the right? So no, even if you did, like that's the thing. Even if you did trade every single candle right direction, and you took absolute returns, and then you add them up, because the compounding factor isn't there, it's not going to equal. That's why buy and hold. These idiots, like they act like they don't know why buy and hold. All of them, and like it's very hard to have excess returns, and it's not going to be with the frequency of changing every candle, because if you add them up, because if you took all the profits and then the next candle you bet with the profits of the last one, so your size is constantly getting bigger too, then it will equal. But like if you take the certain percentage of your bag and bet every candle up and right correctly, even your returns are going to be lower than just leaving it and having the compounded returns, because its returns are multiplicative, not additive.
Right. Yeah, so build pools and then get wet. Those are words to live by.
No, really. Build your pools. You ever seen a chick show up? Pool party, bro.
Pool party. And exactly.
It's running around the pool with a bucket. Be like, I'm rich. Never gonna happen. Let's get it.
Exactly. Great risk managers.
Very habit to break, because this is again another thing about condition that is just up it. But even if you took absolute returns, if your size doesn't compound, you're gonna make less.
Yeah.
How many times have you seen people say, "Oh, I fell asleep and I let the trade"? It's not the running of the trade; it's the frequency of you getting in and out without the compounding of the.
That's the other thing too, is that the only time I remember actually making money over a long period of time in this game was when I bought fucking GVT really low, and then I fell asleep, and then I didn't touch it for a week, and then I woke up with 50K, and it was the only fucking time I actually made some fucking money.
You would have gotten the direction wrong. Partially, it's that.
Yeah.
But what's more important is that the compounding of the return.
Yeah.
Because that's these idiots who say, "Oh, if you just make 1% a day," they don't know. If you ask them, "Okay, so what 365 days?" They don't know. It's 1.1 to the power of they can't do that math. They add it. That's the thing in their head. If you get, the only way you trading is going to catch up with it is that if you traded, you were right, and then you took the profits and you added to the trade. So at one you get, and then there it doesn't work, because then all you need is one wrong one, and then instead of multiplied by something that is +1 plus something, you're multiplying by a fraction, and then to recover from that, you need 1 over that fraction in return.
Right.
So geometric returns, and it will solve a lot of problems for you.
Right.
Just add 1, and then multiply by the price, and then if you want to get back to returns, deduct the 1. That is.
So Matrodog put up a chart in let me show here of Sophie. What do you have the Marxlator set onto here? Is it just a histogram of the RMS, or is it the QEZ? I see that you're using the similarity. That's pretty fucking nice. RMS and QMZ. Okay. Is this current?
So far I wanted to invest in.
Yeah.
But then they don't have it's not they have good money.
Yeah, fuck, that's a great fucking trade.
The CEO got me too. And then I thought they were over, but fucking I think it's pumping. I'm gonna be depressed. He's look at SoFi. Yeah.
Did you trade this?
I remember someone was mentioning SoFi even.
Yeah, cause I'm assuming you were looking at the similarity, and then you saw the down candle, right? And you saw similarity move up, and then you saw the RMS and the QMZ move up with it. You sold, or you're holding bags, rode this up, didn't sell when I should have sold. Oh, that's fucking powerful.
Also, by the way, another thing that I don't know, you probably have access to the cone with the Kelly.
Yeah, yeah, that dude. Yeah, I fucking love that thing.
Yeah, like that's another great thing that people talk about Kelly, but they can't do the odds. So like Kelly's bullshit. They have it. And, yeah.
Well, even like even just using the 50-50 odd, like your trade can still go outside of the Kelly, right? It's just for relative sizing, so you don't fucking blow up.
One of it is win rate. They put in win rate, and one of them is risk reward. But to know the risk reward, you have to have some idea of expected move. You can't just put, like if you say they go, what is the Kelly if your risk reward is like whatever, but we know the odds of that risk reward. Like it's not just can't be anything, you know.
I was using the Kelly. So Matter Dog wants us to show the Kelly. I would be fucking very happy to do that for you. The Kelly can tell you a couple of things. One of them is when you're being unreasonable. One of them is relatively how much risk you should take. I use the half Kelly just because you should. The thing that the Kelly tells you is what you should never bet over it. It doesn't necessarily tell you exactly how much you should bet. The smaller the better, to be quite fucking honest with you.
It's the optimal amount if your bet works out. And then but the problem is Kelly itself is flawed. So there's like a thing called modified Kelly, but that is even the reason. Like if it's optimal, why do I? That's the thing,
right.
But because your assumption needs to change based on the volatility regime. We're making that shit.
Yeah.
If someone asks, well, how would I know? Should I take a quarter, half? The way you know is the more volatile it is, the smaller the fraction it should be. So the higher the fraction, the smaller the amount should be. So it's a flaw in like Kelly, but like these things are people don't even use Kelly, and we're like fixing Kelly. It's the 2 levels above. Yeah.
So I'm gonna cherry pick a little bit here, and I'll let you know how I would have taken this trade at the time. Time back 201.
If you go to make sure you have the correct one. Like, see, it's the target is not up to you, right? It's telling you to target you want to reset, because then you would put in odds that can't happen, right? That's the thing that was nothing.
Yeah. I want to actually set my time to here. Oh no, my Kelly's gonna be.
That's another Luca. Lukey.
Okay. So let's say you are here, right? And I'm just gonna be using my personal setup. You might have different type of trading. You might have a different idea on what the market's doing. I'm not telling you what to do is correct. I'm just telling you how I would have interpreted it at this point in time. Like the assumptions I'm making here is that I have trend moving down. I have the PEP giving me a blue flash. So I'm expecting entropy to move down at this point in time, and I'm expecting volatility to move up. So I have a volatility trade. I have a delta trade on my hands, right? This is my entry. I would be betting down according to the trend tools, right? So that's 0 down. The cross will attempt to interpret some cross off the Fisher or the wave trend or some additional source. And I want to see the panel.
If you have an assumption based on something else, then you don't need to use that. That's
yeah.
like.
And so I'm. This target is not like what has to happen. It's just because you don't know where price is going to go. I'm just using the first standard deviation to get a number that is going to be the optimal bet size, right? And if your bet is looking like this, where it's 7.4% to risk, that's your optimal bet on the account. It's saying you can use the 47 times leverage, although that is still very fucking high. When leverage is very high, it might be suggesting to you that the bet you're taking is unreasonable, right?
The time frame is too small. The time frame is too small. So that's why the leverage.
That's why the leverage is too high. Gotcha. Yeah. So if I were to bet, I would bet either under this, or I would just bet the 7.4% and not bet the 47 times leverage.
A crazy one, because for you know what 40x leverage is like. It's not a good or bad. It's a tool. It's like here's
right. It's because I'm only risking 0.2%, right? And so that's why it's suggesting the high leverage. It's because my risk is so tiny that it's suggesting, hey,
you have to be skillful. Again, it's like giving to a kid. Like if you're good, it's fine. It's gonna work out. But if leverage is
so the thing that I'm going to be looking for an exit, this is just for me, is either a hit of the cone, right, on the downside, volatility peaking, entropy moving back up, trend going up. These are going to be my exits, or price settling above the POVMA. And this is how much I would be risking, probably under it with leverage, because personally I'm uncomfortable using that much leverage. But let's see.
Great, because I just noticed you're on the 1 minute, right?
Yeah.
1 minute, 50 leverage, people have probably done. You know the feeling.
Yeah. Absolutely.
We can't tell you if that's good or bad. You know what it is, and you see it's not like a abstract.
Yeah. Okay, and so look right here is that would have been my exit, because this is one of the conditions that I've set for myself. Entropy did move back up, volatility did give me local peak here, and trend is now positive. This was a losing trade for me, but that's the name of the game.
To assume that like the thing is, like they don't. These are like these TA people give, because these excuses, they're like, hey man, like we don't even need to. When you open a trade, you have to assume it's not going to go your way by geometric counting motion, like up down tick. Like why should it go your way? Like, when it does just go one way, and you're correct, that's when it's not acting like price. If you just predicted it, and then it's not clearly, that's why like VRT and stuff like that exists, because those areas are what's not normal. Like, and those are the only times you trade. The rest of the time, you're getting lucky, you don't even know it. So,
exactly.
So like when you trade, your assumption should be that 50% I'm going to be wrong, and then if it's less than that, it's a bonus. But to think that you're going to be right and then apologize when you, this is like how price works, like up and down randomly.
And, exactly. So this is another entry for me here. Let's see the cone.
When they say I'm the only person who sees this, I'm some expert, I'm have some skill, then okay, magician, when your magic trick doesn't work out, explain it to me. But we're not fucking, the price is Brownian, and we don't fucking don't argue with it. Yeah.
So I could have entered on this candle because I got an entry on the PEP. I see trend is going positive. It's above the POVMA. I'm going to use the same conditions here, but instead this time I'm going to be betting up. Right. The reason why I'm using this stop is just because one close below the POVMA. That's kind of the same level here. I am comfortable with this being the bet. So once again, because I'm risking very similar percentages here, it's attempting to tell me that, hey, this bet is reasonable. It's not giving me optimal bet of like 100% or anything. It's not giving me a negative bet, which would also suggest, let's actually show that. So if I go target future bars 5 and then I go stop future bars 15, when I'm risking more then I'm potentially gaining, you'll see this thing flip into a negative and suggesting a negative 103 times leverage, right? So that's one of the ways that Kelly's going to tell you, hey, your bet is completely unreasonable here. Don't take the bet. Let's go back.
Even when it's even, it will tell you not to take the bet, because then, like, if you're risking to your reward is like why risk money?
Yeah.
If the right, so it has to be more than.
Yeah, and my conditions are exactly the same for exit. HVZ, sorry, not HVZ, QMC going into some sort of extreme, entropy moving back up, trend going negative, or a stop below the POV MA, or a hit of the cone. So let's see how this trade plays out.
And if some new person hears this, if someone comes and tells you trade 1% of your account, I have no fucking clue what they're talking about.
Yeah.
This is how it works, and they've never even heard.
So after this candle, I would be looking for this to close. I would be out of this trade. The entropy has moved up now. The trend has gone negative. I would be losing some on this trade as well. So this is the accepting kind of the reality of trading, because the thing that Kelly's trying to do is to prevent you from being blown up, right? So that you can live to fight another day, so that you can maximize those fucking gains when they actually do come. And let's actually take a look-see, because you can actually take a long on this trade, even though I don't have entropy here, or sorry, not a long, a short on this trade. Just flip the Kelly around, 0 down.
It's the same dollar, and it's putting it at risk. So you want you want certainty, and that's what, like, lowering entropy you want.
Yeah.
Because why risk the same dollar where you know their area price where you make having an assumption only on direction is going to be less random. So that's the time it makes sense to risk your dollar, right? Because you can just save it and then risk it somewhere other place.
Yeah.
So, but when you if entropy is going up, it's not like that's the logic of not taking trade. You can still trade it, but like you're taking this extra risk.
Yeah. So this is an example of an extra risk trade. When you have a flip, but you still have volatility moving up, you might still want to take that trade. You should still use the Kelly. It will tell you this is the half Kelly, what you would be risking. So let's see if this one works.
Maximum returns.
Yeah, this one didn't work as well.
The entropy is not dropping, and then you like, well, I would have missed this trade, and I would have not made my big. But then you have to look at risk adjusted.
Yeah, exactly. Yo, what's happening, Bouse? I'm just gonna continue this one. Yeah, see, this is fucking. I would be out on this. Yeah, I would be out on this. And this is kind of, what happens when you trade the 1 minutes too. You get a lot of occurrences, but you get a lot more randomness on them, right? So definitely use the Kelly in order to prevent being blown up. It's kind of accepting the fact that you don't know shit, right?
Like the whole don't if you want to if you're on the 1 minute, it should be for you trying to get like your zooming in. You shouldn't form your assumption like you're trying to build pools, right? And buy dips. You only like as long as you lower, you can trade, and then like if with the profits you go and trade against the spot or the stunk, then you're lowering your cost basis. Fine, it's okay to do 1 minute and then have some assumption, but general assumption, like if you want to take an entry, determine your size on the 1 minute, because you're saying my duration of the trade. The whole thing is like the duration that you need for expected, like you saw with the probability panel. If you put enough time, that's going to have an effect on the returns. Is how much time, how much exposure you have to them.
Yeah.
And leverage is like a cheating way of like cutting the time.
Exactly.
So like you don't want to just academics do by math too. It's not just made up. It's like you can calculate how much time do you need for the geometric Brownian motion to travel a certain distance, and then if you don't give it enough time, it's unreasonable to think that you're going to be right. A certain amount of time for the motion to travel a certain distance, so it shouldn't. Yeah. If you want to be consistent with like, hey, don't just constantly trade. That's my point.
And use this bar replay tool, right? To practice. You don't need to fucking use the money, but you know, if you're unsure how the tool's behaving in real time, use the bar replay tool. It's very helpful. On smaller time frames, you're gonna see a lot more occurrences, right? So
when you put on a trade, you don't need to look at the market to know how much.
Yeah.
Type of trade you want. That like academics come and say, I have 2% delta risk, whatever. They will describe the trade and they will say, by this date, I'm gonna have this much money. That's what like Casey does when they go, I'm selling premiums and then the maximum profits. I'm gonna like the highest profit that they're gonna is. They're not looking at the market to figure that shit.
Exactly.
So
exactly. So I think this is as good a spot as any to kind of just cut the stream, and I'll be back on later today to watch the market close.
There's one comment there's one.
What's the correlation called? Joe, what's happening, man? The correlation tool is called the EEC. And
I think you have a different one on. You have the one that's HVP and CC in one.
Yeah.
Semi-made. Yeah, that's just an option. Yeah, EEC is the better option.
Yeah, the EEC will tell you a lot more information, and it can be used to correlate any two things, including indicators and price or indicators and indicators, and yeah, very useful tool there.
This you wouldn't need to put. This is back in the day when I had the idea that like at zeros and hundreds, you could do correlate. This is only so you don't have to need two of them on, but everyone has access.
Exactly. Yeah, guys, thanks for joining us, and I hope you guys had fun. I hope it was engaging for you guys, and I'll be back on later today to go over some of the market, and yeah, hopefully we'll see you there. How does it perform compared to BACC? The EEC, I think, will tell you a lot more information.
BACC is better. BACC, because we updated it, the p-value is...
Oh, is that right? Oh, shit.
Yeah. Well, because this the only reason this existed was because they were doing those, memorize this, and it goes up and down. Well, can we just have two things in one? But we didn't keep it. And maybe, Semi sent me an update, and we...
Gotcha.
Yeah.
All right, guys, don't get blown up out there. Trade safe.
go, losing self-control. I keep telling myself, but I don't wanna let you know. Is this what we become? Strangers on the run, looking for something, chasing the sun. All those days, trying to find a place where you won't make them just be alone, alone. All those nights, lying by your side, like it's a vibe, feeling it shine under your spotlight. That's the way every day goes. Looking back, I know we started falling. We were falling in love, yeah. Took my heart and you rode off. Was I feeling never enough for you, baby? When you left me chasing you, trying to find a place where we can be.